Sonal is here to tell us about the numbers that came in post-market hours yesterday. Sonal, over to you.
Thanks a lot for that, Sonia. I'll start with Aegis Logistics. Good set of numbers coming in there. Revenues have gone up by 48%. So has the EBITDA, is up around 47.5%. Moving on, Galaxy Surfactants, another good set of numbers. Profits are up around 43%, coming in at 57 crore rupees. On Gati also good numbers. Revenues are 14% and EBITDA also is up around 29%. They've also reported a profit versus a loss last year. Kolte Patil, on the other hand, while the pre-sales were good on a YY basis, sequentially they have declined by 15%. Volumes are also down by 21% on a sequential basis. Gujarat Alkalis, weak set of numbers. EBITDA margins have declined due to cost pressures. The power cost and the other expenses have shot up considerably. Himmat Singha also weak set of numbers. Margins have declined by 110 basis points. Profits are also down 4%. Expect some red tick on that stock today.
Okay, so largely green. Okay, speaking of 600 stocks, I think that's why people should watch this top 10. Because we are telling people you don't have to watch all of them. We'll tell you what's worth watching. Okay, Nigel, apart from results, there are some stocks on your radar.
Well, that's right, Lata. Let's start off with GE Shipping. The management is going to be meeting in the next week or so to consider a buyback. So that stock should open up in the green. You have VRL Logistics. ICRA has gone ahead and upgraded their rating on a couple of the instruments. So that stock as well could see green to open up with. Then we have some reports based that's not been verified by us till now. Piramal Capital, they have offloaded close to around 2,000 crores of loan in terms of exposure to the Lodha Group. That will be read positively for Piramal Enterprises because the overhang on the stock has been the exposure that they have to Lodha. So watch out for that stock. Also, reports indicate that Welspun, they are in talks to acquire some of the slum rehabilitation projects that were funded by DHFL. So keep an eye out on DHFL. And finally, some trouble for Jet because foreign courts or the Dutch court, they have started bankruptcy proceedings against the airline. So keep an eye out on that as well. This as well reports as of now.
Okay, thanks Nigel for putting all of that into perspective for us. Also, in less than 10 minutes from now, Aurobindo Pharma will have a conference call at 8:30 a.m. My colleague Ekta will be listening in and giving you more details on that. But here's a quick recap of our top stocks. Stocks with positive news flow today. There's Sun Pharma, NMDC, Aegis Logistics, Galaxy Surfactants, GE Shipping, VRL Logistics, DHFL, Piramal Enterprises and Gati. While stocks with negative news flow this morning, there's IRB Infra, Aurobindo Pharma, Pfizer, Lakshmi Vilas Bank, Gujarat Alkalis, Kolte Patil, Himmat Singha, Jet Airways, Indiabulls Housing, LIC Housing Finance and PNB Housing Finance.
All right, the biggest of them all, of course, is Sun Pharma. So let's listen in to what Dilip Singhvi, the managing director of Sun Pharma, said at the company's conference call about the quarterly performance, and I think he's giving you some details about that price collusion charge which some US states, United States in the US have raised. Listen to some of the key bites that we picked up.
Consolidated sales for the quarter were rupees 7,044 crore, a growth of 5% year on year. Sun Pharma has terminated its distribution agreement with Aditya Medicines with effect from 1st April 2019, and going forward, Sun Pharma's wholly owned subsidiary will be doing the distribution in India. Q4 sales include a one-time impact of approximately rupees 1,085 crore for this change. Excluding this impact, our consolidated sale for Q4 were at rupees 8,129 crores. There is no further update to share on the whistleblower complaint. I would also like to take this opportunity to discuss the US generic price collusion allegations. On May 10, 2019, a new complaint was filed by various US states, and the suit names our subsidiary Taro USA and one of its former employees. Taro continues to believe that these suits are without merit and will continue to defend against them vigorously. We expect our consolidated sales to grow by low to mid double digit teens on the reported basis. Consolidated R&D investments are estimated at between 8 to 9% of sales. capex for FY20 is estimated at approximately $200 million.
Okay, that was a bunch of statements from the chairman. Let's invite an analyst to tell us what to make of all the numbers and the events of Sudhir Walia also stepping off from executive positions. Nimesh Mehta, founder and director of research at Delta Advisor, joins us on the phone line. Good morning, Nimesh. Thank you very much. Well, that actually is the overarching first question. If you adjust for the exclusion of Aditya Medisale's impact, and if you looked at Sudhir Walia stepping off, overall, will investors go with a positive impact after the results?
Well, as far as the numbers are concerned, the adjusted performance was pretty much in line with at least what we expected, and by and large what I think was market expecting out of it. So to that extent, there is no negative surprise on the numbers, so to say. And about Mr. Sudhir Walia's setting aside and all that, I am not sure how the market will take, because any which way he was gradually moving away from the company, and so now with this new thing, it may not directly have any impact on the performance or the financial performance of the company, but yeah, it might still have some sentimental impact on the stock price in terms of whatever governance issues that Sun Pharma might be facing.
Well, Nimesh, hi, good morning. But what would you do with the stock itself? Because if you map the trajectory over the last 2 years, this company has done nothing for investors. 2 years back, it was at 500 and today it's at 400. Is there anything in the FY20 guidance that is encouraging enough for a re-rating? Or do you think that it will continue to be an underperformer?
Well, FY20 guidance is not anything greatly to cheer about. Neither it has been any dismal. I mean, it is about 12 to 15% is what I make out of it. So from that perspective, and this is, I think, largely reflects the slow ramp up of the specialty pipeline. So yeah, I mean, in terms of the stock performance, maybe it may remain here for a while again. May not see any great improvement because of the result and because of the outlook. So that way, it's like I would kind of call it neutral from a stock price perspective.
So what is your own call on the stock at the current price? Are you buying it?
At the current price, what we feel is that again there are near-term pressures in terms of the expenses that they need to incur for the specialty pipeline and a slow ramp up of specialty pipeline. So near-term, it will still continue with whatever margins we are talking about in FY19 and without any significant increase in sales. But longer-term, I see a likelihood of a strong improvement given the operating leverage and also a ramp up in the specialty pipeline. So for any stock investor, if he has invested, I would just ask him to hold on or wait for, if they are not invested, wait for some time. They may get some.
You will get it cheaper than 400.
Yeah. Well, I mean, I don't expect, but yeah, I mean, sentimentally it can go either way.
Okay, so nothing in the FY20 guidance which is encouraging. All right, that's about Sun Pharma. Do you track Aurobindo by any chance? Because the numbers were good, but the debt concerns is something that's keeping the stock a bit subdued.
Right, yeah. So, yeah, we do track, and I saw that the numbers were good. We need to understand as to how much are the numbers impacted due to the acquisition, the recent acquisition which got integrated in this quarter. So we need to know from the call. But yes, debt again is also a function of the acquisition they've made. So, but it's significant. I guess the bigger acquisition was Spectrum Pharma, which got integrated, which is roughly where they would have paid $160 million. But the additional debt is about $235 million. So we need to understand that debt remains a big concern for Aurobindo. The numbers on the P&L looks very good, beating expectation. But yeah, we need to know about it.
Okay, but I, again, the same question. At current prices, do you think it absorbs or discounts the worries over debt? Is it cheap enough at 670 rupees or whatever?
It is, but we also have to keep in mind that they already have one OAI, and which is why the stock price has come down to whatever level it is. So we need to weigh that as well. We need to find out what the company is talking about, the OAI concerns as well. If it's because the additional EPS accretion that is likely to come from the Sandoz acquisition also will come with additional debt.
Okay.
So yeah, we have to weigh all of those things.
Okay, all right, Nimish, we will leave it at that. But thank you for giving us your quick synopsis of the numbers and what you expect from the stocks.